Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Bharat Electronics. Our analyst maintains buy rating on Bharat Electronics with a target price of ₹380. BEL Q1 performance outperformed our expectation on all the fronts. Management has guided our revenue growth of 15% with an operating margin of 23 to 25%. The cumulative order inflows for 2026-27 is around 75,000 crores, including a large order for quick reaction surface to air missile. The current order book stands at Rs 76,000 crore, representing 3.6 times FY24 revenues. The stock has outperformed indices and is currently trading at 45.2 times FY25 and 37.3 times PE multiple of FY26 EPS. Next, we have an update on Maruti. Our analyst maintains buy on Maruti with a price target of Rs 14,712. In expectation of the stability in operating performance, structural upward shift in its product mix, and hope of revival of retail sales during the festive season. For Q1, Maruti has reported 140 bps beat in EBITDA margin to 12.7% on 260 bps year-on-year expansion in gross margins. Further, the management is continuing to be optimistic on demand for CNG vehicles. The stock trades at a price to equity multiple of 23.7 times and EV by EBITDA multiple of 15.4 times its FY26 earnings. Last, we have an update on Mahindra and Mahindra. Our analyst maintains a buy on M&M with a SOTP based price target of Rs 3,431 due to a healthy traction in its PV segment, market leadership in the tractor segment, opportunity to grow in the farm machinery segment, and its roadmap to play in the EV space. For Q1, its EBITDA margin exceeded estimates by 110 bps on healthy rise in gross margins. Management has maintained mid to high teens growth guidance for its PV segment in FY25 and observes an early green shoot in the tractor segment. Stock trades at price to equity multiple of 24.7 times and EV by EBITDA multiple of 17.4 times its FY26 estimates.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.